Hi guys, this is Will. Welcome back to another video on your income at home. Today is about ChargePoint, the EV charging network. It's going to go public at the end of December by merging with Switchback energy company. As we see, the news literally spike. Is it a good moment to buy? Should we wait? I think I have some interesting information for you guys, so I hope you will enjoy it. Let's go. So for those who don't know me already, I'm Will, a French entrepreneur with 8% experience online. I have a full blog about online business called Your Income at Home, where you can find topics like how to make money online with a business, investment, saving money. You can check it out in the description. Just a quick reminder, of course, all the stuff that I said on the channel is just for entertainment. You should do always your own research before trying anything. If we look at the chart before merging, we can see that stock is kind of lagging around 15 and nothing really happened. And there's this big spike until 40. If we draw a line like I did to kind of predict the next move at the same level of craziness right now, maybe we could have at the end of December a price around 40-45, and in the beginning of 21 something around the 50. But to me, the stock is kind of overpriced, and if we check the RSI indicator, this is exactly what is happening right now. Another thing you should be careful, guys, if you want to find an entry point right now. ChargePoint is not a real IPO, it's emerging, so there's a very special patterns. When the news happen about emerging, as we see previously on the charts begins to, you see the spike like this. As we're getting closer to the official merger date and the ticker change, people are buying, and then boom. So don't be that guy who's going to buy around here, hoping that this is the new Google or thing like this. If you want to find a good entry point, you should wait for all the buyers who's going to sell shares and buy the dip around here. So from a technical analysis, that's all. I don't have very much to say. It's a bit overpriced right now to me. So before doing a fundamental analysis, guys, there's a thing very important I want to talk about. It's about equity ownership of ChargePoint. Because actually the investor of SBE are going to represent only 10% of the capital. You can find it in the presentation, in the merging presentation of Switchback Energy and ChargePoint online. And what does that mean? It means that price action that we're going to have about SBE is going to represent only 10% of ChargePoint. Knowing that, this is very important, and this is what you should be careful with the price. So since 2007, ChargePoint focused on offering the best EV vehicles charging experience. They have installed over like 100,000 charging stations. ChargePoint is a leader in charging networks. The company has 73% of the US market of the level 2 charging station. It's also growing in the European market. ChargePoint currently makes most of this money through charging station sales, but it's moving into more a service partnership and a cloud network. The first thing very interesting with ChargePoint is the market size. The market is very big. From the decision of the government to promote more electric vehicles from people who want to use more EV, the charging station can be located anywhere in a city, for example, close to a road, school, park, anywhere. Another thing very interesting with ChargePoint is how much the business can be disruptive to previous and traditional oil companies and gas stations. Those big companies need to adapt. Those companies want to be more and more in the EV industry. Of course, if one of these big companies buy ChargePoint, the price will go up. So this is a very interesting point. Number one reason why it might not be a good idea to invest in ChargePoint is Tesla. And it's kind of ironic because Tesla is the main EV companies, but it's the problem of ChargePoint actually, because Tesla has its own charging system. If Tesla keeps growing and stay the major companies, the major EV companies, there's no reason to have different charging networks. Of course, Tesla is not going to be the only EV companies. The industry is going to be very, very big. But the second reason is about ChargePoint chargers. Most of their network is L2 charger. And L2 charger has major limitation. Have to wait like 3 or 4 hours for only 40-50 miles. And in the L3 charger industry, other companies are already leaders. This is a very serious question, because if they want to take the contract, if they want to follow the demand of the people for EV in the next year, of course they have to change their networks. The last one why it might not be a good idea is earnings. If we look at the earnings in the presentation, ChargePoint is projecting a $30 million profit for the first time in 2024. And because SBE only has 10%, that means it's a tiny bit, a very tiny bit. It's just 3 million reward for the shareholders of SBE. So in summary, guys, don't forget that SBE is just 10% of ChargePoint. Don't try to follow this trend, the valued price. The market of EV is big, very interesting in the next year, but I don't think it's the best stocks to hold over the years. You might get more profit if you buy, to me anyhow, the EV Chinese company. The big question about their businesses is Tesla. If Tesla keeps getting the major role of EV, those companies will make less money. So if you enjoy this analysis, I try to be very deep as I can. Please like the video. You can of course join the family by subscribing to the channel, hit the notification bell. So be careful on the market, guys, and bye.